FIGS is a high growth, profitable stock that has a bright future ahead. Here's everything you need to know in a few minutes.
Figs is a recently IPO'd company that's valued at $4.1 billion today, and it trades under the ticker symbol FIGS.
The company's mission is to celebrate, empower, and serve those who serve others. The company is primarily focused on the healthcare industry, and specifically, it makes high quality scrubs that you can't get anywhere else.
It has also started to move into other accessories for the healthcare industry and has plans to enter new verticals as well.
What impressed us about this business is that almost all of its sales are direct to consumer. That means that end consumers go to the company's website or use the company's mobile app to place orders, and that drives 98% of this company's sales.
And because this company is mostly focused on healthcare workers, that is a relatively recession resistant industry. Now, what we're waiting to see is recurring revenue. It's too early to tell, but what we want to see is that healthcare workers keep coming back to FIGS to buy new scrubs over time.
Company has spent time developing a proprietary cloth that is used in its scrubs, and it claims that it is the best quality cloth that you can buy. That gives it a low cost advantage in theory for that particular style. However, we're not convinced that that is a big advantage for this company, even though it does call that out.
On the other hand, talk to any healthcare worker and they will tell you that the FIGS brand is very strong. So we give them full credit for that. And it's also worth mentioning that the company has some counter positioning advantages. Most scrubs are sold through third party vendors. By going direct to consumer, FIGS has a counter positioning advantage.
This company is rapidly adding new customers to its platform, and it's doing so fairly inexpensively. That makes us believe that this company's moat is rapidly expanding.
Sales growth has been quite impressive, nearly doubling every year over the past 3 years, and it has a 72% gross margin. Very impressive for a clothing company.
While the company is not yet technically profitable on a GAAP basis, it is profitable when you look at free cash flow, and the company's balance sheet is absolutely pristine. Financially, FIGS is in great shape.
FIGS was founded by a pair of women, Heather Hassan and Trina Spear, who are still on board as CEOs. They get solid reviews from employees on Glassdoor.com, and they own a sizable chunk, 12% of the company.
The biggest bull case for investors is the company's embedded optionality. While it's initially focused on healthcare workers, the company has announced plans to expand its brand into other verticals such as hospitality and food services.
Now, right now, by focusing on just healthcare workers, the company is going after an estimated $12 billion market, of which they've captured about 3%, but we expect that pie to grow over time as they move outside of healthcare, and as the operating leverage kicks in, the profitability growth could be quite quick.
FIG stock hasn't done much for investors since it came public. That's not surprising given that this is a highly valued company and growth stocks have been under a lot of pressure. But if you're just looking at how the company is doing versus expectations, so far, so good.
Unsurprisingly, because it's a growth company, it is not focused on returning anything to shareholders at this time via buybacks or a dividend.
One key risk for investors to keep an eye on is the competition. While FIGS has established itself as the brand leader in an unbranded market, its products are more expensive than the generic versions. That means that competition is a key risk for investors to watch indefinitely.
And we need to point out that the stock is richly valued. Currently, it trades for 11 times sales and over 85 times free cash flow, which is quite expensive for a clothing manufacturer.
However, overall, both of us think that the risks of this company from a business perspective are actually pretty low. So how can investors win? First, investors should keep their eye on customer growth. We want to see the FIGS brand name continue to win over healthcare workers and the sales to grow.
Second, we want to listen for management's comments about customers coming back and making repeat orders. They talked about this in their prospectus, and we want to see customers continue coming back to FIGS.
Third, as we said before, the biggest bull case for this company is expanding into new industry verticals. Food services and hospitality are two near-term opportunities, and if the company's brand name can successfully enter those markets, the sky is the limit for this business. So how did FIG score on our investing checklists? The answer is pretty good. On my checklist, this company already got a 73. That number could go meaningfully higher over time if its stock starts to beat the market and if it continues to exceed Wall Street's estimates.
And a score of a 10 on my framework was very high for a clothing manufacturer. In fact, when we finished our hour-long deep dive into FIGS, I pointed out that this is pretty much the highest score a company like this could get. So I was impressed.
Overall, both of us think that FIGS is a very impressive business, and if the company can continue to grow rapidly, we could see it being a market-beating stock from here. What did you think of this new format? Please let us know in the comment section below if this video was helpful. Brian's out.